Hello and welcome. My name is Atiqah binti KAMAL, and today I will be discussing about Islamic Fintech and financial inclusion, a major issue affecting Islamic financial system. Islamic finance is grounded in Sharia principles, fairness, ethical conduct, risk sharing, and social justice. Financial inclusion is a core objective of Islamic finance, ensuring access for the unbanked and underserved. Islamic fintech has emerged as a modern extension of Islamic finance. It leverages digital technology to deliver Sharia-compliant financial services. Now, let's talk about the main issues of Islamic fintech and financial inclusion that is affecting the Islamic financial system. The first main issue is financial inclusion through Islamic fintech. Islamic fintech plays an important role in promoting financial inclusion by addressing long-standing barriers such as high transaction costs, geographical limitations, and strict documentation requirements. Through mobile-based platforms, it offers Sharia-compliant products like peer-to-peer financing, micro-takaful, and digital microfinance, which allow low-income individuals and small entrepreneurs to access financial services without involving riba, garar, or maisir. In addition, the integration of Islamic social finance instruments such as zakat, wakaf, and sadaqah improves transparency and efficiency in wealth distribution. However, the success of this initiative depends on effective governance, user trust, and reliable digital infrastructure. The next issue is ethical and consumer protection risk. Despite its benefits, Islamic fintech also raises ethical and consumer protection concerns. Easy digital access and instant financing approvals may encourage overborrowing, especially among financially inexperienced users. Algorithm driven credit assessments may prioritize growth over ethical considerations, which contradicts the Islamic finance principle of moderation. To address this issue, Islamic fintech providers must embed responsible financing principles, ensure transparent disclosures, apply Sharia based risk sharing mechanisms, and incorporate financial education tools to support informed decision making. Another major issue facing Islamic fintech is weak Sharia governance. Many fintech startups operate without proper Sharia oversight or sufficient access to qualified Sharia scholars. This leads to inconsistent interpretations and raises concerns about superficial compliance. Furthermore, differences in Sharia rulings across jurisdictions create uncertainty, particularly for innovative products such as smart contracts and digital tokens. Strengthening Sharia governance frameworks and enhancing collaboration with institutions like AUFI and IFSB are essential to ensure consistency, credibility, and ethical integrity. Regulatory and legal barriers also limit the growth of Islamic fintech. Many existing regulations are designed for conventional banking systems and are not suitable for fintech business models. This creates uncertainty in areas such as licensing, consumer protection, data privacy, and cross border operations. As a result, innovation may be discouraged and users may face higher risk of fraud and data misuse. Adaptive regulatory approaches, including regulatory sandboxes and harmonized Islamic finance policies, are necessary to support innovation while protecting consumers. In addition, the digital divide presents a significant obstacle to inclusive Islamic fintech development. Many rural and low income communities lack access to reliable internet, digital devices, and essential digital skills. Limited financial and Sharia literacy further restrict effective participation and increase the risk of misuse. At the same time, Islamic fintech firms face sustainability challenges in balancing social objectives with commercial viability. Addressing these issues requires investment in digital infrastructure, targeted education initiatives, and public private partnerships. In conclusion, Islamic fintech offers strong potential to promote financial inclusion through innovative and Sharia compliant digital solutions. Therefore, a holistic approach is required involving stronger governance frameworks, adaptive regulations, improved digital and financial literacy, responsible financing practices, and close collaboration between regulators, Sharia scholars, and technology providers. Ultimately, Islamic fintech should go beyond merely digitizing financial services and instead serve as a transformative tool that upholds Maqasid al-Sharia and supports inclusive and sustainable economic development.